Welcome to the next episode of Slap That Ass Podcast, the podcast by investors for investors. 2021 is just starting, and already we're having lockdowns in the UK announced yesterday. Tokyo is having record cases, delays in vaccine distribution, so it's really shaping out. We decide tonight as well who holds the key Senate seats on whether it's a blue government in the U.S. Bitcoin is at record highs, and it's predicted by Fitch Ratings that the oil and gas sector is going to have a third of all bond defaults this year. We looked back in our previous episode, but now, as is tradition, we are here to look ahead. We're going to make some resolutions, and the religious origins of New Year's resolutions were that people made promises at the start of each year that they would return borrowed objects and pay their debts. It's ironic given the fact that the Fed has started purchasing our debts, but we'll talk about that later. Right now, we're going to disclaimer, and then we'll introduce each other. This podcast or any statements made on this podcast should not be interpreted as a recommendation to buy or sell securities. This is for educational and entertainment purposes only. I'm not a licensed financial advisor, and neither are these jokers. And what we do is fucking stupid. We do not know your personal financial situation, and instead you should seek out an advisor. You should assume that any security we mention may be held short or long on the podcast. So who wants to go first to introduce themselves?
Happy New Year, everybody. I'm Millennial. For those of you degens that know me over on Twitch or YouTube, I trade dog shit too. 10 years in digital marketing as a consultant. I like to trade people's psychology, market psychology, and it's going to be a lot more of that, I think, in the new year. But yeah, dog shit trader 101. That's me.
They say that, stupidity is the strongest force in the universe. And honestly, I tried fighting it. Didn't work. Tried joining them. Didn't work. So now I just prey upon them. I mean, it's not that difficult. But I'm Redemption, and I am a ex-institutional trader. I trade mostly using Dark Pool, which is classified as flow, which is also classified as technical trader, which I think I'm one of the only technical traders here.
Mm-hmm.
Scummy.
And Happy New Year, guys. I'm ExiledInvestor. I am a long-term investor. Traditionally, I have targeted large cap companies, but maybe that changes this year.
All right. Well, I'm MartiniRita. I'm MartiniRita, and I invest for a living. I live in Airbnbs. I have an educational background in systems engineering with a concentration in finance. So blah, blah, blah. It's just, I know how to price things, I guess. Joining me, I wrote that out wrong. Anyway, so that's me. The topic today is new trader, new you. And I'm super excited about this because we get to look forward. We get to look at what we think is going to happen in 2021 and what are we going to do about it, given that 2020 was such a shit show. But let's make it fun and make some predictions about some behavioral trends next year. Will the stay-at-home trend continue, or do you think it ends? What do you guys think?
I think if they were broke at the start of this and didn't make anything out of it, which is a good majority of people, I don't think stay-at-home is possible. I think it's a pipe dream to some people right now that they wish they could still be working in. Honestly, it feels like a humbling event to be grateful for actually being able to have a job. Like, if you already had work from home, you might become smug and whatnot. But like those of us who have done like jobs where you actually have to physically be there, and the inability to be there because, let's say, you're not working in an essential service or not working in an essential business, I think it's a great humbling moment for a lot of people who, I guess, took it for granted. So yeah, but
Yeah,
it's always
I'm out on work from home. as the vaccine comes in, businesses have made it pointedly clear, irregardless of how they tried to make it sunshine and rainbow farts as they were locked down, of like, we can still do this. We're still a good company. Hey, we might actually keep doing this. They've shown their true colors as soon as we got vaccine news, where they're like, bitch, everybody back to work. Back to your desk. We need handcuffs on you, and you need to be in the office. I mean, some of them are going to be all right. They're not going to stay where they are, but I think like Zoom will be okay. But a lot of the work from home stuff, especially the online education stuff, that shit's going right out the window. It's gone. If you're in any of these, and this is my opinion as always, guys, but that GSX, TEDx, NetX, China hustle, pump and dump bullshit online education, it's all gone. It's gone. If you're in it, power to you.
Yeah, I have to agree. I think I'm a little longer on it in terms of, I think the first 1 to 2 quarters of this year is just effectively going to be a continuation of last year. I think you start to see that taper down. And I think the key driver for that, for me in my mind at least, is the starting of the new school year in August, September. I think that's probably the target when we start seeing more usual life prevail. It just seems like there's such a huge amount of our population is kids, and it seems to me fairly inevitable that that's going to be the hard target. Is okay. It's given enough time for the vaccine to reach a significant percentage of the populace, and ultimately, not everyone can afford childcare, and as you guys rightly said, the trend towards getting back to offices and stuff like that, it's not going to prevail. It's definitely changing things, and I think companies that can accommodate or have seen an uptick in productivity will be more flexible like that. But I think you just see that as a shift in more like a flexible working hours, where you get 3 days in the office and 2 days flexible to work from home or something. And I think that reflects in all the stocks that have rode up as a result of this. That's my thoughts. What about you, Teeny?
You know, I think short term I think we snap back, just like you guys say. I mean, I think we're all in agreement here. I think long term, though, like we think really long term, like the next 10 years, I think you've really broken into something not necessarily new, but I'm just seeing a lot of people talk about nascent industries that may not be considered mainstream as real businesses, right? If there's any idiot left, but there are, that think gaming isn't its own entertainment really like huge thing, they do now. And
yeah, absolutely.
I think we're going to see a lot of acceleration around, I think coming out of Q4 of this year, like really long term, people really evaluating long term things that they have ignored and starting to make long-term moves. Not just, hey, the pandemic's here. Fuck, we all have to work from home and everyone has a whole lot of time on their hands. No, like shit, this thing is real. We really, really need to put some structure around it. And I know that's tough for U.S. businesses because they don't really think long-term, but compared to like Asian companies. But I think they're really going to start to do that. And I'm going to be really interested to see what they're talking about. I think it'll be really important to look at earnings reports and kind of see the conversation that's happening. And not just the transcripts. You need to listen to them talk, because there's so much more that you can garner information-wise of somebody talking versus like reading it. I listen to them because I hear how, like, do they seem excited? Are they doing corporate speak to you? Are they, how are they selling it to their investors and to their board? I don't know. I feel like you hear so much more. I don't know if anyone.
I think there are remnants
Parallels
of
that.
this digital landscape that we are going to see continue. I think online gambling is a thing. I honestly think that's going to continue. And a lot of the news that I've been seeing is hype around online gambling because it takes it out of the casinos and out of I mean, okay, we're talking the sin sector ultimately. So keep that in mind, folks. In the States, we call the gambling sector part of the sin sector. Think about what happened when porno mags and strip clubs stopped being the norm for that industry, and instead what you got was online, right? That's what's happening in the gambling industry right now. It's moving out of back alleys, mafiosos, and casinos and into your handheld, whether it's a smartphone or a tablet or whatever, right? On the
Yeah.
go gambling. Casino in your pocket. You can trade on single events. You can trade on gaming. You can trade on elections. I think that that's one aspect of this digital evolution that is going to hold in a big way. You see big players that were traditional brick and mortars like MGM making massive bids on companies like Ladbrokes.
Yeah. I think we've touched on it before. I don't know if it was in the podcast or in a Discord, but I think it becomes a lot more like the UK and Europe. I think they are the model, particularly the UK in online gambling, because we love to gamble.
Sports betting is the norm. In Europe, it was not like it was just accepted. Yeah, sure. I put some money on the football match, right? Like, sure. Like,
Oh, anything. Two flies
But-
walking down the wall, we'll bet on it.
right. So I think in the States there's a huge movement into that. I think it's going to be a boom for those that capture it. Obviously, that makes me very bullish on things like DraftKings. But even more than just DraftKings, the companies that are currently bringing out analytics tools to capture the data on those crowds, I think those companies are going to do very well as well, because it's a whole new sector that needs to be analyzed and understood.
I think I'm looking at the Vice and Crutch point of view, especially from the work from home. And Rita, you just reminded me because like I was actually looking at Zynga last month as a possible secondary
like
play
that.
because, yeah, especially with the craze of at home and everything, and Zynga has like a lot of, from what I remember, they had a lot of, and my information is really out of date on this thing, but
I'll help you.
Zynga had a lot of mobile games, which if anybody's ever sat in a toilet, knows that a lot of people check their Facebook, they
Sat
check,
on a toilet.
they check news, they play games and stuff like that, right? I think there is a market for that regardless, but I think more so now since everybody's always stuck at home.
Yeah.
You know, when you, especially like if you ever worked in an office environment, you know how uncomfortable it is to have someone looking over your shoulder, tracking every minute that you take as a considered break, even going to the washroom, tracking how long you take to go to the washroom. It's creepy, but people used to do this manually. Now they can automatically do it with technology. So the same kind of thing hasn't changed. Now, what has changed is obviously your form of entertainment because entertainment involves both mostly in the experience, and for you to be able to like go to the washroom and check like and do stuff like as if you were still sitting here at your desk. I think that kind of thing is becoming more realized and actually becoming more of a habitual thing. But in terms of people physically going back to the offices and stuff like that, I think the only question for me would be, what is more cost effective for them as a company? Who cares about productivity or whatever, right? Because I would imagine there's like hundreds, if not thousands of people willing to work for cheaper than that guy that you're paying to do whatever work for you remotely, that you could pay and they will work their ass off for a fraction of their pay. And if that cost of not having a physical office is a lot better, I mean, I'm pretty sure companies will go after that rather than, preferring that they come in.
It's interesting to me. You've seen a lot of people that actually miss that office environment.
Yeah.
I'll tell you one thing that just sort of sprung in my mind. The flip side of it. So everyone, well, not everyone, but the rise of working out at home, Peloton, all those guys, literally anything fitness related is booming. Are gyms fucked?
I think
I
gyms
don't
are
know.
absolutely fucked.
I think so. I know a guy who's got a bunch of Anytime Fitnesses, and they're already like on a wafer thin margin. Basically, that whole operation is.
Is it super
um,
leveraged?
It's not super leveraged per se, but I mean, you're effectively, they have full control of the supply chain, the marketing, but everything. They dictate where you get the equipment from, yada, yada, yada. So basically, you're buying a managerial role when you're a franchisee. And they don't, it's kind of hard to get the data on them, but I know from pouring through books that a lot of people basically give that business away just to get out of it. Because to sell the business, you have to get their permission, right? And also, when you get the commercial space, they dictate that the commercial space. It's a 10-year commitment for those particular ones, I believe. They also make you do that commitment for the commercial space, so you're locked in. So unless you declare bankruptcy or you effectively give it away. And incentivize someone else to pick it up for you. It just dawned on me that there might be a real big problem there longer term for them if people have decided they enjoy this. I have personally, like I like the gym, but at the same time, I've had a blast working out at home recently. It was just a thought I'd throw in the hat.
So
I would say mom and pop gyms for sure. I'm there with you. Planet Fitness, I think, is a huge bull opportunity.
Yeah, I don't think that's going anywhere anytime soon. They're too well
free
established.
Pizza Friday? Come on. What American doesn't love Free Pizza Friday?
yeah, but what about
the lunk alarm that bothers me.
That brings up a good point. What about the gyms where it's more of a socialization event, like Lifetime Fitness, right? You know, they go there, they have events all the time. People like, oh yeah, I met this friend through Lifetime Fitness. Oh yeah, I met this friend because we did this there. You know, like maybe that's the one that survives, right? And yeah, Planet Fitness has some aspects of that. Somebody just, by the way, guys, we have a live studio audience, and somebody just put up a gif of somebody at a Planet Fitness eating on the treadmill, because that's a thing.
With wheelies on the treadmill. So he's not.
You're kidding.
The man after my own heart.
Yeah, no, he's on wheelies. So he's standing on the treadmill with wheelies, not working out, eating the free pizza. This is America. Planet Fitness will be fine.
Okay.
I don't even want to talk to
me.
myself at the gym. I just want to be in the gym by myself. I don't like workout buddies. I don't like any of that stuff. So I'm not really familiar with the lifestyle sort of stuff. But
honestly, speaking from a person who's like the one that's not married, I can see gyms having somewhat of a place, because especially if you're not into the bars and clubs and stuff like that, the gym is a great place to.
Yeah.
The gym is a great place to kind of. I had to experience this firsthand because I'm very uncomfortable with this, but I started getting checked out like a couple months into going to the gym, and that wasn't even my focus. I didn't even realize it was happening. Like this woman literally had to look over my fucking shoulder for me to catch a signal, and basically basically follow me. Like, it's a little creepy, but I guess, you know, I've been told some women don't have a lot of game, but it's nice to be checked out. But I think that's an aspect, and that could be a factor, especially if bars and clubs have this imposition where they can't have as many people, right? And that's what they're kind of bars and clubs. I would imagine they are more prevalent upon that. But I think in terms of I honestly think, I don't think it's the end of gyms. Maybe some of the smaller ones, but the bigger chains, I think they will survive, and I think people will most likely flock to that.
Yep.
All I'm going to say is you should take a yoga class.
Oh yeah.
No, I refuse to take a yoga class.
Why? It's great.
Oh, it's amazing.
You're
but also,
staring
I
at,
mean,
you know,
Bro, downward dog.
as an investor in Lulu,
dog.
I'm just saying it's fantastic.
but I think there's one thing we can't ignore, which is the lifestyle part of fitness. I mean, it's not just the socialization; it's the clothes, the Are you a Luluer? Are you a Pelotoner? I mean, come on.
Yeah, I think that's interesting as well, though, because sales have been really strong through 2020. And I mean, we all know about the shortages on like fitness equipment and clothing. I was just at 3 different Dick's Sporting Goods this morning, and either I made a really good bet when I bought their stock a few months ago, or I made a really bad bet because there is not shit in their inventory. Like, it looks like the store has been raided. Yeah, and
So
I figured...
Are you long dicks or short dicks then?
I like to think I'm long, but ultimately it's going to be a short one. But it's not. And I asked the girl who was there that, like, is this just like the post New Year's rush? And she's like, nah, we just haven't been getting any inventory in. There's not even like allocated space on the shelves for new inventory, really. It's so slim. The only thing they had a bunch of is like exercise bikes and weights, but like clothing wise, it's gone. It's been picked over. So, interesting finding out. So, anyone that's listening, let me know what your dicks look like, because I want to know.
Oh, your dicks wicked. I had a moment.
Are your dicks locks unloaded?
Oh
or are they
my
firing
God.
blanks?
Better yet, take a photo for me while you're in the store and let us see your dicks.
Yes.
No, you cannot. Great. Somebody's going to tweet out this podcast and say, send dick pics.
Hashtag set
Get
the
out
bird
of
free.
here.
Hashtag my dicks.
Yeah, it's at the MartiniRita.
No. I do not. That's the thing. People will do it. Get the fuck out of here. Okay. So can we back up, though, to gaming? I want to talk about gaming as the importance of mobile. Because, see, what's really difficult about people to understand about gaming is that mobile is such a huge part, and it's more prevalent in Asia. Asia gaming is completely different than the U.S., right? Like, one thing that's really tough for people to like, one surprising thing is that, like, pay to win games are so big over there because it's, you know, in the U.S. it's more of like a meritocracy. Right? So culturally, it's different. So I want to talk about that. What do you guys think?
Also, full disclosure, I have entered into Zynga despite my I'm going to stay liquid till January, February sentiment. But
did you just buy it right
doing
now?
real well with that.
Yes.
On the podcast.
Yeah.
You're doing real well there, Redemption. Attaboy.
Okay.
I'm proud of you.
Yep.
Okay,
New year, new you.
Google gobble one of us.
Because you're going to be...
gaming.
I have to tell you something, though. I have to tell you something about your Zynga position. So, mobile gaming, the leader, at least the U.S. side, is King Games, which is owned by ATVI. And they're much better at it than Zynga.
Here's the thing, though. I don't think it's so much about quality. I think it's more about... there's a certain point where it's just about quantity. And I think that... from a game studio perspective, you don't know if the game you're releasing is going to be a hit. Like, who knew about Popfish Games before like Bejeweled or any of that stuff, right? Who heard of Bethesda before any of the Elder Scrolls games? CD Projekt Red, who knew about them before the Witcher series? Like, you just need one decent title to take off, and I think that if your company is able to, it's not always about quality. Yes, there is quality in some games and stuff like that, but I think it's more about frequency because you don't know what's going to catch on and become a trend.
So
That's a fair point, but also I see it being fairly cyclical. Like, look at Rovio.
Yeah.
Like, Rovio were the name for a hot minute. I don't know where they are now. I know they still have probably substantial revenue from residual, from Angry Birds and whatnot, but I haven't really heard much about them. They were like Activision for a hot minute. You couldn't stop hearing about them. And there's a bunch of others I could reel off that are very much the same. On the other hand, though, look at Unity as a platform.
God,
Unity and Nintendo. Look at Unity and look at Nintendo.
45 billion market cap on Unity is, and it's sustained. It's not. I've disliked that price from day one, and it's just left me behind. It's just been like, ha ha ha, you're wrong, you're wrong. And constantly they're gloating at me at a 45 billion market cap or whatever. It's probably 50 by now. I don't know. I had to take it off my watch list because I just wanted to puke every time I looked at it.
Niantic and Nintendo, right? As AR becomes more and more prevalent in mobile gaming, Nintendo is a leader in that field. They're going to continue. Mario Kart Mobile. Tell me none of y'all are going to be playing Mario Kart Mobile.
Oh, absolutely.
Right?
I love Nintendo for starters. I bought Nintendo stock purely because I love Nintendo as a company. It wasn't a sensible investment at the time. It was just basically a YOLO. And
but it's been
I'll buy that because I like it. Oh, I have no regrets right now, but that was definitely not planned for or expected. It was just a punt. So
I think gaming is going to mature in a big way for sure. Through this year, you see things like Cyberpunk, where again we touched on it being a cinematic experience in many aspects. And when you've got cinema falling flat, check out the latest AMC price for those of you that don't know what I'm talking about, or the latest release of Wonder Woman 84 to theaters.
Oh God.
It's evolving. It's an industry that is evolving month after month. We're getting record numbers on the gaming sector, and those record numbers are a direct result of people seeking entertainment in that format. And it's evolved. We talked about this huge just through 2020, where it used to be a male-dominated industry, and then we watched GameStop buy back up. Not on the teenagers and the gamers. Mm-hmm. We watched it buy back up on female gamers. People buying Animal Crossing.
Thank you.
Women.
Thank you.
Women buying Animal Crossing and Switches. People playing with their families again. It was huge.
Hanging out in them.
Massive.
Hanging out in them. Literally, like, they have no place. See, they're not part of the AAA game system where you sit on Discord. So their version of that was sitting in Animal Crossing, right? It's sitting in those voice channels. Because I don't know about you, but sitting in those Discord voice channels kept me sane during the lockdown, to be entirely honest. Yep. But we are ignoring. I don't know that you guys invest in gaming that heavily, but you guys are missing the two biggest picks of gaming. You know, what is the biggest gaming company in the U.S.? Anybody?
I'm gonna say it is probably not EA, but I'm gonna say it's Activision.
I'd say Activision.
What about you? Exile, do you want to take a gander, I guess?
Apple.
Yay! You did it! You did it! Apple. You know that?
Mm-hmm.
Oh, yeah, mobile gaming, I forgot, yeah.
Mm-hmm.
The Apple Arcade is lit. I've been trying that for the last few weeks. I love it. I love it. It's like having Atari again.
By revenue, Apple is the largest U.S. gaming company solely because of the App Store. Because they get a cut of everybody's purchases on there. And if you're talking about AR, think about Apple's AR kit, and think about the fact that they've created their own silicon. So now their mobile gaming can be huge because the power the power consumption on mobile games is so important, right? So I'm really excited to see what's going to happen with Apple. If you guys are wondering the biggest gaming company in the world, that would be Tencent. So we cannot ignore that ticker either.
Oh, I can. Watch me.
I can't.
Rita, doesn't that violate your Chinese policy?
We can't ignore it. Doesn't mean I'm going to go invest in it. I don't touch it. By the way, guys, that's not, just to be super clear, I just don't like Chinese stocks because I technically don't own the company, right? You have to own it through, God, I forgot the structure, but you indirectly own it. Like, even though you own a company, it's usually a company that owns a fund that owns one in China. Like, it's very disparate, so I don't like it.
Anytime
Yeah,
you
it's
see
like
an ADR or
ADR on a promissory note, on a hope and a dream, on a
Mm-hmm.
yeah, you're fucked. When we decide you're
ETNs
fucked.
and stuff
Yeah,
like that. Yeah.
on a fart in the wind.
Go and ask Jack Ma how his Chinese stocks are holding out for him right now. Oh wait, you can't.
No. They found him. They were reporting today. Benzinga reported today. Jack Ma has been found. He's just laying low.
Oh,
In
I'm sure
other
he is.
unrelated news, deepfakes are suddenly becoming really good.
And new
Oh,
burial
God, this gift.
plot found outside Jack Ma's house.
Yeah. No, it's just a rose garden.
Okay.
So
that's
this-
gaming. Gaming's
yeah.
gonna evolve.
So this gives us a good segue into my next question is since we're talking about unity and dumb valuations, right? My next question is, will the trend of valuations that aka valuations don't matter? I think I can say that the whole group believes that in here. Do you think that's going to continue into next year?
Okay. So what you just said was evaluations don't matter. That I won't agree to. Valuations
Okay.
matter. They don't make sense.
I would argue
And-
PE doesn't matter anymore.
Yeah, like it seems like such a stupid fine line for me to make of like, well, what do you mean they don't make sense but they matter?
Yeah, I'm
As companies
confused.
come out with this bonkers evaluation one after another, for me, with how I'm planning to trade the year, so long as I see these insane valuations continuing to come out through SPACs and IPOs and whatever else, the latest dog shit pump and dump, as these insane valuations keep coming, that's reinforcing me that the market is going to continue doing the same bonkers batshit stuff that we've seen through 2020. So that's why they're important. Are they accurate? Hell no.
Yeah, I mean, I've said it time and time again on the podcast alone is where else do you put your money? And I do think there's going to be a change coming this year. And I think the play this year, which I guess we can get into on a different podcast, but is long volatility effectively. I think really what you see is a continuation of 2020 for at least the first quarter, probably into the second quarter. I think inflation is going to become a real thing. I mean, real inflation, not CPI, is going to become a real factor. And yeah, I think the valuations of businesses are just going to be, they're going to maintain. For at least now. You'll see some get corrected along the way. They're going to take a hit, but I think towards the end of the year, you start to see a leveling off of the fever. Maybe going into the summer. It's kind of hard to time or put anything I say at that point is going to be a guess, I suppose. But I really do think later in the year, the shift we're going to see is going to be towards smaller and mid-cap stocks. I think people are going to start searching for value rather than straight, mega cap explosive growth. And I think there's a lot of opportunity there. The more I look at the last week for me has been sort of taking a deeper dive there and looking for opportunities further down the market cap list. And I really think I also think there's probably some reversal due for
I hope.
sectors that have underperformed. And I think that's why it might not be a straight reversal in terms of, I don't think the ass is going to drop out of any of the, the fangs or the fat man G's, as we call them, necessarily. I definitely think some of them, like Tesla, are going to correct a little, but right now there's nothing to drive that. There's nothing. It's kind of baseless at this point. I think later in the year they have to have monster earnings. But anyway, I just think there's going to be more opportunity in the underperforming sectors. So real estate, energy, things like that. Industrials for me is my bet for the end of Q1. I think I did it last year, and I still think this year is going to be a good place to look. Commodity similarly. I mean, they haven't performed that well last year, so I don't really play them that much, so definitely want to keep an eye on for me. But I just see a shift rather than a. I just think people are going to keep looking for the next thing, and I think that opportunity is going to be in mid cap. I think if you want to keep playing mega caps and big caps and the bleeding edge businesses like your Teslas, and I really think PE is going to start mattering a little more, and unless earnings can keep up with, or at least show a reason, I think people might start at the institutional level realizing there's just too much priced into some of these companies.
I think that a lot of the problem with setting valuation is that you have to. I mean, I guess most people are really bad at this. They set unrealistic valuations of a lot of stocks, and I find that to be
You mean they
purposeful,
set
in a sense.
valuations? That's new.
Well, I mean, it's purposeful, right? Because you want to make it seem like it's better, especially a lot of these financial bloggers and stuff like that. They don't actually trade per se, but they want to do this because they know they have influence, and especially depending on the platform you're on or whatever, right? But if you say that if you say that you're a financial analyst or whatever, right, and that you, like, this certain company recommends certain stocks, and they don't have a position in it and have never done so, and to give you some post clarity, one of the ones that I looked up, financial blogger, doesn't even live or has anything to do with the country he writes about. He posts some of his portfolio, right?
Today's hot take.
In the last 5 years, guess how much he gained? Just take a wild guess.
2%.
Millennial, God damn it! You know because I told you this morning, but 5%. In the last 5 years, this financial blogger that has been posting some of his trades, not all of his trades, has only made 5% since inception. 5%. That's 1% a year. Interest rates in Canada were about 2% for the year. You would have made more money leaving it in the bank. And
I'm up 11% today.
These are the people that I just don't like, because especially if they have a personally vested interest, which these people would, because they're in a place of influence, and they would say, hey, look at this unknown stock. It's has this valuation, has this person there, blah 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 blah, whatever kind of bullshit reasoning. They might not even wrote it themselves. They might have just copied someone else, which is not uncommon. They are in a perfect position to pump that stock, and that's something I don't like, especially when they talk out of their ass, essentially, because again, this person on their LinkedIn also lists some of the other articles they wrote about. They claim they're a financial analyst and financial blogger and stuff like that, right? 0 qualifications. The other articles they have written was like 10 household goods every good homemaker needs and stuff like that, and they actually list that on their thing. I'm like, I know there's this thing about having your resume showing diversity in your writing skills and stuff like that, but you're a writer. You're not a financial analyst. That doesn't, like, I don't see the link in between that right now, unless you're like Eddie Murphy from Trading Places.
Yeah.
Yeah, unless you're like that, or you're like Millennial, who actually is very in touch with psychology and people and how they react and think. I really don't think that you should be legally allowed to actually write for a financial website that is focused on investors.
Yeah, I mean, the problem with that is anybody that actually is trading, has skin in the game, is doing well, isn't going to give you the time of day to write those articles.
Or they will, but the only thing is that, like, you can't. The only misexpectation I know people will have is that you can't expect them to post very frequently. I can guarantee you they'll have time to write about it. They'll talk about it and everything, but they're very focused on specific plays, not like a broad spectrum of saying, oh god, what's some of the stupid stuff I've been recommended, like Fortis or some stupid real estate company in Canada. And they talk about, and these articles too, and I'm not going to name them by name, but a quarter of it'll like have a clickbait headline, talk a little bit about it, but about 50 to 25% of the article will be suggesting you get into these like stupid Canadian companies that don't go anywhere, have zero growth, or are dividend darlings in Canada or something stupid. Like it's a sales pitch, but I find it very scummy because they know it doesn't talk about, even if they were to talk about the market cap or any of that stuff, none of that shit matters. It's just they have a personal. I think they have a personal, especially if they have a personal stake in it. I am even more leery of them writing about this and saying that, oh, market cap expectation is this or whatever. It's just surreal and unrealistic.
So do you think that people?
It's just too easy to
reading
write
this stuff-
hype.
Yep, that's exactly it.
It's
In a
too
bull
easy to
market
what?
like this, to write hype, it's too friggin' easy.
Yeah.
When stonks only go up, any idiot with a keyboard can type, "This stock's gonna go up."
Yep.
The depth of some of these articles, daily on IB, I open up articles for my leaps. Why is space up today by Motley Fool? 9 times out of 10, you open the article, we don't know. There's no reason why it's going up. And it's like, you are the analyst for Motley Fool on space, and you don't know that they have an impending launch coming up next week, and that's why the stock is going up in price?
Yeah.
I don't know is the best financial. That's the FA that we get out of a known investment periodical like Motley Fool. It's Motley Fool for a reason, folks. You are the Motley Fool if you are reading it for investment insight. It's not there.
now.
It doesn't exist.
It's clickbait.
Hey now,
Nope.
come on.
Nope. Don't
Okay.
give me that Gardner bullshit. They haven't
Hold
written an article
on.
in 6 months.
Hold on. David and Tom are fine, but I think it's this
They've
problem.
not written an article in 6 months.
Well, because their content is paid content, and I'm sorry, but they have handily beat the S&P. They have a record that's in most of their services, not all of their services. They have a published record that says it beats the S&P. So maybe you need to not be cheap and pay for it.
If you are going to the Motley Fool, if you go to fool.com and you are not a paid subscriber, you are getting,
Dog shit. Yeah,
Dog
I would
shit.
agree. I would agree.
and not even spicy dog shit. I'm not talking spicy dog shit. I'm talking
You know
smelly
what's-
dog shit.
You know what's worse, Rita, is that I looked at it and I was just like, I can write a better article. Like, granted, I know people are going to be on me about my grammar, but no one gives a shit about grammar, especially if you're making money. You can, but it's besides the point. I looked at the editorial email. I emailed the guy and I was like, okay, well, I have a write-up here ready, but I'm just going to email him first because I don't want to inundate him with like, this here. I'm a writer. Here's my article right away or whatever that stuff. Like, I want to get details first. I emailed it. It bounced, and I don't know how people get in or if they even write it. Like, you still accepting writers? Like what the hell? Like I had this write up all ready to go, and it was talking about the platinum palladium stuff, which I've already made a video on, and I basically tried to TLDR it a little bit and stuff like that right into an article, and I had it ready to go. I was like, okay, I'll save this aside when he wants a sample or something like that or something to put forward. Emailed the guy, nothing, bounce. And I'm like, is this just Motley Fool Canada or is it US? Because I can only find the Canadian one, so I don't really know.
Well, but on that vein of that, people read and listen to dog shit. I think that this trend of valuations, me personally, I think it will continue, but definitely this year, because if you look at all the stimulus and you look at fintech and the gamification of investing, we just came across, and I showed to the stream, this new product that's going to come out, and it's called Quarry, Quoree. It's at the top of Product Hunt's list. It's very hypey. And remember, I showed you, Millennial, the screens that they're going to have?
Yep.
Do you remember that? It looks like Snapchat and Robinhood and TikTok had a baby, and that's how people are going to invest. And if you haven't looked at it, you should Google it. It's QUOREE. It is pure acid for I have no other explanation. You need to go look at it yourself. If you do nothing, see what's happening to the retail investor, and I think that's going to continue. But there will be a psychological moment, and we all need to look for it really closely, that you'll see the bubble burst in people's mind that dumb stuff doesn't go up anymore. And I feel like it'll all happen suddenly. But that's just what I've seen happens.
There's another one
very
coming
quickly.
online. There's I don't know if you've heard of public.com. Public.com is an interesting one for marketers as well, because they're trying to make a social network out of basically Robinhood.
Yeah.
So it's like, John invested in Spotify, and so you and your friends can, which I mean, in some regards would kind of suit our community, okay, but it
I'd
really
love to
does
make money off of that.
Yeah, it's just like, I'd love to be Goldman Sachs's friend so I could inverse them again. But no, just like, it's like watching them buy and like John bought Spotify, it's just like, okay, that's kind of cool. And I was on the, I still am on the, I guess the beta or the pre-release of it. And it's, you can see where that sort of constant dopamine push is going to, just like it does with social media platforms. You can see this is a game of addiction.
Yeah, guys,
crazy.
this is the age-old thing of, if you aren't watching the sheep, you're part of the herd.
Mm-hmm.
Oh, that's a good one.
Just to be clear, this is it. This has always been what it's been. Exile and I work in marketing, guys. I'm not saying that to be derogatory. It's a reality of the fact. If you aren't watching the sheep run by, you are a part of the herd.
Yep.
Period.
You don't pay for the product, you are the product. Same deal.
That's it. It's exact same thing. WSB, everybody shits all over WSB. There are a lot of people making a lot of money on that. Not because they are actively involved with WSB, but because they are watching the sheep. RobinTrack, we saw institutional banks, massive hedge funds using the Robinhood API to track where the sheep were headed. And they front run them. And they did that all through 2020 until they got caught, and then they locked down the API.
Yeah.
Right.
And give a bullshit, well, we might bring it back in a new form later. Like, oh.
And
I miss RobinTrack so much.
Oh, God, I love that thing. We just so you guys know, if you weren't with us during the summer, but Millennial and I sat there and I hate day trading because I don't think, for the amount of time you spend on it, it's not a great, and you're more likely to bankrupt yourself. But we did successfully day trade using the RobinTrack website of exactly shorting the sheep. So I feel like I can back this up by saying we've done it. We did it successfully. And another thing to note that you guys are really mentioning is that the SEC went after Robinhood because they didn't properly disclose what's called a statement called payment for order flow, meaning that what transactions are being made by Robinhood people are given first on a very quick basis. The orders are given to people like Citadel, people like, I forget the names, but
Goldman.
Exactly. They're given to other people. Your orders are given to other people before they reach the market, so that way they can specifically trade against you. That's literally what it is, and they didn't disclose that. I could just tell. I've been screaming about Robinhood from the beginning because basically I just sat there and tried to fill something on Robinhood, and I tried to fill something on a regular broker, like Interactive Brokers, and you can just see that the book is open, the order should be filled, and so I just, you gotta be really careful with these things.
I actually discovered that by accident. Like, I didn't even know how they handled their order flow. I thought it was just you have to understand EC and maker-taker price modeling for a lot of these electronic fills. But what I noticed, and I discovered this by accident, was someone quoted me something on a somewhat of a thin option. They were giving me a price quote, and it was like about 3 cent spread. And that's when I looked at it. When he requoted me and told me about it, he said that he actually saw a 7 cent spread, and that's where you're getting screwed upon. Not only are you getting shit pricing and all that sort of stuff and non-preferential fills, but those who can, especially with the thin options, are getting gamed. They don't even know about it. You would have never known unless you actually opened with a legitimate broker and actually were able to see orders on the other side. Like in some cases, also, like even let's say you're not with IB, right? Like the way you can still kind of tell that they're somewhat legit broker is that like if you don't have access to that book, there should still be a quote, and there's someone there that's actually publicly lit. It'll still say like, for example, like if Zynga was here, whatever, right? 982 by 983. But the quotes that you're seeing on your market debt is like 980 by 984 or something like that, right? There is always going to be someone there, and that the order entry thing there is going to tell you that someone's there. It's just not going to tell you how much, but it's still better than what Robinhood will tell you, because Robinhood will tell you it's like 978 by whatever, like 990 or something ludicrously spread out. And yeah, so there's a lot of wool being pulled over their eyes, and I think a lot of it. I think this was mentioned before. I didn't know until like I just came across it by accident, and I started looking it up and reading about it. They did subtly mention it, but I think what happened was that people was so enamored by people on Wall Street bets like making 1,000% returns or something like that, that they just glossed over this fact. They're like, oh, it's just a penny. No one cares about a penny. It's not going to make that much of a difference. You won't know this until like you start trading, I guess. What would you say, Rita? Like over 10,000 shares a piece?
Well, it depends on it depends on like the dollar weighted volume, right? Like you could have a ton of shares, but if it's like a tiny thing, but you have a lot of volume, it's not gonna, it isn't gonna matter, right? It's both.
If you have, well, I'm of the opposite. If you have tiny volume, it won't really matter, because you're looking for more of a. It's basically inconsequential. It adds up and it becomes a lot, but it's essentially inconsequential. But when you start moving north of a lot of that, like you start scaling up, you will notice the effects of how much of a penny difference can actually. I'm using penny as the most minimal reference, right? There are also half dollars that you could, half pennies that you can get into, but you will notice it like when you start swinging around. Like just go on a paper account and swing around 10,000 shares at a time, like on any ticker that you can think of. Just any decent ticker you can think of, start swinging around 10,000 shares and tell me that one penny doesn't make a lot of a difference over time. Like I see that as a problem, but most of these guys, these Robinhood guys, they're YOLOing into single positions, so it doesn't. In that aspect, I don't think it really matters too much, but you are getting screwed over time.
So I want to go and talk about kind of what we're already been talking about is, these habits that we have an impact, right? And, using Fisher Price brokers, especially if you're doing short-term trades like redemption is bringing up, have a huge impact on you because, it's a term called slippage, and it can add up over time, like redemption is saying. So I guess that's the next question on the board is, what habits have we seen this year that are absolutely toxic to take into the next year? And I know you guys are going to love this question.
So many to choose from.
I
How long
know,
have we
right?
got?
Like,
It's going to be a
what
4-hour
is
Where do I
podcast.
start? So somewhere along the year, online gurus, whether it's TikTok, Instagram, Twitch, YouTube, you name it, everybody became a trader in this bull market. And a really scary pattern of people shadow trading online folks became a reality. And there's a lot of people that are just going to continue doing that into this year. One of the things that I will tell people is, well, who should I watch and who shouldn't I watch online as far as stocks? In my opinion, the opinion that I give them is, if you watch a streamer and they tell you, don't ever do anything I do, that should be someone you watch. If you are watching somebody online that is not discouraging you from what they are doing, you've got a problem. And the amount of BS nonsense that I see out there of people saying, I mean, we watch some scary analysis on TikTok. I've seen it live on Twitch where people are talking about TA on the tick. Like, they're trying to be high frequency traders with $100 in their Robinhood portfolio. Like, you're trading against algos that are using massive computing power. There's no way you're going to beat them. Like, the insanity out there, ladies and gentlemen, of trading and shadow trading alongside people that are online, whether it's Wall Street Bets, TikTok, Instagram, YouTube, I don't care. Stop that crap. It's
honestly,
toxic. It's venomous. Stop it. It's radioactive. Get out.
Honestly, here's the thing, though. Like, there's a lot to understand, especially from the guru's perspective, because you're going to see... There was a video that was posted to me of this guy reviewing a bunch of trading gurus, from like, the Raging Bull guys to a certain person that I don't want to mention because he will go after you legally.
Please don't mention. Please don't.
Yeah, but that Jason Bond guy is being pursued by the SEC. That's actually factual.
So then you mention him?
He's being pursued. He's already being sued. Okay, it's so anyways, but. One pattern
allegedly.
I noticed.
Can you use the word allegedly? Thanks.
Fine. He is being pursued by the SEC for allegedly misleading people.
Thank you.
Into day trading and stuff like that. But one pattern I really noticed was kind of funny. And granted, like, leave your bias at the door for this thing and trigger warning or whatever. But it seemed to be people trust the somewhat. I don't know if they're considered good looking, but
you guys. I'm
somewhat alpha looking. Somewhat alpha looking white guy, and then it's a scale. It goes from somewhat alpha looking white guy to regular looking white guy, and then there's a couple like Rainer Teo or whatever his name is, and Asmath and Chad, all these other people. They were on the bottom of the list, but obviously, like, it seems really weird because people would be more willing to part with their money and be happy with it, giving it to the alpha-looking white dude who's showing you, jets, Lambos, and all this other shit. And then the next on the list would be the somewhat moderate, non-threatening-looking white dudes. And then you got us Asian brothers in the last column there. But
screw you, man! I resemble that remark.
You are
the
not
funny
Asian.
thing about these, I'm talking about just these gurus. You're not a guru, but.
Oh, nice.
Damn.
But these guys, here's the thing though, like, the funny thing is that if you look at this graph or whatever, right? Ray Teo or whatever, Rainer Teo, I forgot his name, but I've seen him before. I've seen some of his ads and stuff like that. I've seen his channel. He displays everything he does every single day. He's a day trader. He shows everything he does. I respect that. There was another guy I told you about that I haven't made a video on. I've just been lazy, but like, I respect what this guy did, because if he actually made a website to track everything he does. But it's funny because, like, if you look at it, some of the richest guys are wealthy, not because they day trade or not because they are working in the profession, but they are great at marketing the dream to you, just giving you really basic shit that you can't use. Whereas the guys who are actually somewhat wealthy on the lower rated spectrum are actually wealthy because they are excellent at what they do, but they're just terrible at marketing. It's a really funny scale to watch, especially with that. And one of the things I actually like to do, especially with gurus, is that I've seen people do this, and there's a lot of mental gymnastics they do this, where they show, actually I think this should be a podcast in itself, but they show, you always learn a lot more from their losses than their wins. And how do I know that? Well, there was an account that was shown to me before, and what happened was that the guy said that he never lost. And that to me sounds absolutely ludicrous, because I would look back and I see some losers, but then something in it seemed kind of weird, because I would look at it and it didn't hit me at first, right? I had to look at it a second time, but I noticed that some of his winners, they range from like a couple hours, couple days, couple weeks to a couple years. And here's the thing, though. Yeah, ADHD got it right there, Martingale. What I noticed in this guy was that his losers started out as massive fucking losers to the point where his equity dropped, I think it was like 40% at one point with these losers, and he kept fucking adding more into it. And he keeps advocating himself as like a very skilled trader and stuff like that. But it took me a second look because one, I didn't trust that first statement. Second, even though he's showing proof that he's a profitable trader and shit like that, but the second look at it, I'm like, you are a couple trades away from blowing up your account. No one gives a shit about risk of ruin because risk of ruin implies that you actually get out of your losses before they become even bigger. But this dude, there have been so many black swan events that have happened over the years that I can't tell you that you will be essentially wiped off the map, especially if this person is very ingrained with their especially if their ego's huge. The more arrogant they are, the more likely they will blow their ass out because they're just going to be super confident that it has to do this, it has to do that. And unfortunately, you won't know that until after they blow their ass out, or you actually are willing to go through and thumb through their trades and understand what are the fallacies in there, what did they do wrong, or what did they do right.
Yeah, I agree. I absolutely agree. It's so easy to bite on the misinformation as well. Like this whole thing, especially with the rise of streaming and YouTube being a place people go to get insight, not just entertainment, but they go for insight. It's so easy for bullshit to perpetuate. Like it's like a creeping mold of that you just cannot get rid of, and it's going to get worse before it gets better. And it's, again, look how easily you can change figures with the dev console on Google or something like on Chrome. Sorry, I could take my account and make it worth 500 million just with a couple of clicks. Even if it looks sincere, I have a lot of trouble. I have major trust issues with most people when they're touting their success. So in that vein, I think my biggest issue of going back to Teeny's question there is really getting information from shitty sources and then trading on it, and then trading with really bad habits as well. So there's just and then like the hype stocks some of them are just so obvious that you have to play them. I get that, but there's so many bullshit ones, and because something vaguely related performed well 3 weeks ago, this one's inevitably gonna, and it's okay, so we'll just bypass any modicum of due diligence we would have put on this and just throw some money at it. The other thing is leverage. People are over leveraged, and the balance of having a rainy day fund, a savings account, and a 401k, and all the sensible financial shit before you start going balls deep in Robinhood margin with your shiny new account, and then exactly. Then you're on margin, and and then that first margin call comes, and it's gonna take you out at the knees. It's and for anyone that doesn't know, thankfully I've never been there before. I've had a margin call before, but it's no big deal. But brokers don't fuck around. When they call and ask for their money, they're getting their money, or your shit's gonna be out on the lawn before the sun goes down.
Liquidated.
So. I think that just comes with experience. I'm lucky enough to be basically a dinosaur now online. I'm 37, heaven forfend. But I learned from guys who were old when I was in my 20s, and it just they're not kids who grew up in this stuff. So if you grew up in the late 90s and 2000s, you haven't seen really bad times. You haven't, there's been a couple of events here and there, but you've never traded through a big one other than I mean, I never traded through 87. I was 6, but 5. God, my math is terrible. But I mean, like that hangover through the 90s, that it was always in the news, even that it was a talking point for a decade. So was 2008, and a lot of people weren't trading anywhere near 2008. That was 12 years ago. So you're well on your way to that being a generation ago, and you haven't picked up the safety net that you need to give yourself emotionally to just see the bullshit and know when enough is enough and which positions are not worth taking. And I've made some fucking stupid plays, especially in 2020. I'm usually Mr. Safe Bet, but I've never bet the farm on it. I've never been close. If I lost every penny I put in any one of those trades, I'm good. I'm not going to be giving up booty for cash to pay the bills. It's just the safety net is just, and it's the same with banks. I mean, Dodd-Frank changed a lot with banks, but if you look at European banks especially, they've got the same bad habits they've always had. They're levered up to the gills still. They're like 30, they're at 30 times leverage or something like that. US banks don't lever like European banks do, but there hasn't been that many lessons learned. They're in a better place than they were 10, 15 years ago, but it's still... And people have these habits too. Now that it's gamified, people treat it like it's a game. Everyone except brokers. Because when it goes bad, brokers don't treat it like it's a game. So that's really the stuff that kind of chapped my ass a little bit through. I frankly don't care. I don't want anyone to lose. I'd love to see everyone win on this, but if your bad decisions screw your life up, I'm not going to be losing sleep over it.
I have to be the pessimist here and say that unfortunately it's a zero-sum game and we need liquidity for the move, right, Rita?
Yeah, there's always someone else on that other side of that trade.
Hold on.
I know the clarification of that.
The research says that derivatives are zero-sum and stock is not zero-sum because you can build a new company and whoop, there's creativity. So remember that when you're in options. So half
in equity,
of it is
when you win, someone loses, right?
Not over the long term. Because we extract minerals from the ground, right? And that wasn't explored before. And then you have more value into the stock market. That's possible in population growth. So no, equity over the long term is not zero sum, which is why I constantly encourage people to go long term. Your
neo position is zero sum.
Okay,
look, your China hustle is zero sum. Your ACB is zero sum. If you're winning, somebody's losing. If you're on Robinhood or Wall Street Bets, you're trading zero sum.
Yeah, I'm not inclined to disagree with that. But it's just for me, it's. I don't think a lot of people, especially newer traders, I don't think they fully understand risk. And I think that's really the lesson. If I could just snap my fingers and instill knowledge in people en masse, that would be what I would give the world, is a risk management strategy when they're trading.
I love that. Keep that train going. Martini, one good thing instead of all the shit that we covered that's terrible. What would be one good thing you could give people this year?
So that was my next segue, but I want to have my piece on the shit that is toxic this year.
Absolutely.
Oh, my bad.
I think that if the number one thing that you don't take into next year, okay, is realize how much the internet is. If you've watched The Wolf of Wall Street, it's not a real Italian word, okay, but they call it a fugazi, okay, and it's a fakery, right? The SPAC game is a fakery, okay? Your stock guru is a fakery, and it's a big game, and you get enthralled with it, and you think some of it's fucking real, and that's why I put my live account on stream, and I tell you, don't listen to anything but accept what's on that screen. And even that is impossible for you to know if it's real or not. You know why? Because if you go to Twitch, I encourage you to watch Kit Boga. Kit Boga is a guy on Twitch who goes out there and scams scammers, and he's very good at it. His mother, so his backstory is that his mother, yeah, thank you for the GIF in live chat. His mother was scammed by people who took her life savings from her. And they are very good at it. And he's very good at embarrassing the shit out of these people. It is so convincing. He will literally clone bank accounts or the whole banking website. And then he'll interact with it on the internet with these scammers and just waste their time. His entire purpose in life is to waste their time so that way they're not scamming real people. And he does voices and, he pretends like he goes to the store to get money from MoneyGram or whatever, the Western Union, whatever, right? Like, it is so
sensational.
It is unbelievable. And it will give you an education about how easy shit is faked. And you need to be so careful.
How much they hate America. Yeah.
Yeah, but because, we saw something that was so toxic, literally acid, where this girl talked about how she turned $1 into $4,000 in a day.
Oh, it hurt. Every ounce of my FA being wept, was crying and screaming in pain as we watched that video.
And you know that classic saying where it's just like, where are your parents? My question is, where's the SEC?
Right. Where's the SEC at?
SEC doesn't give a shit. There's only 2 people left working there at this point, I think.
Here's the most toxic thing, right? Is to see the view count on it. Does anyone want to take a view count? Because it was indelible in my mind.
30 million.
7 million views.
Oh my god.
Oh, sorry, I was thinking of the likes. My bad.
7
I believe it.
Million people saw that shit.
Here's the thing.
I believe it. You go to YouTube and you search how to trade the stock market. I guarantee you, in your search results, you're going to get a video by a guy named Garen Phillips. Okay?
Here's the thing. This is why this thing works. Rita, since you've dealt with clients before too in your past, you only work with high net worth clients. Here's the reason why you only work with the high net worth clients. How many
I haven't
people
worked with clients in my past. Sorry.
Oh, okay, never mind. So, I've gotten offers to manage portfolios before, right? Here's the problem, though. They are idiots like this that say, "Oh, if I give you $1, can you make me $10,000, or can you make me a millionaire, or some shit like that?" Right? The firm that I walked into for a job at the beginning of last year, and I know I keep referencing it because it's the most recent one and it's the most ridiculous one I've ever walked into. The guy expected me to go halvesies with him, and not only that, he expected me to do about 30-40% returns a month. And for quick math geniuses, that's about 2,000 or 2,700% for the year. And he expected me to do this consistently. There was nothing in that contract that didn't specify any of that sort of stuff, but that is ridiculous, even for someone like me, to have that type of ridiculous amount of return in 1 year. And granted, this was the year to do it, but in previous years, no, that's ridiculous. But the reason why this thing works is because everybody will have a freaking dollar. No one has 10,000, 25,000 laying around, and an abundance of patience to actually, which is very important, to actually go and find someone that's a licensed financial advisor to help guide them properly. They want the lowest risk possible, but they want the highest, like even in a
Highest return. Yep.
Yeah, the most
No
absurd, not
big
the highest.
game.
It's not the highest return. It's the most absurd fucking return that you can think of. It's
And
not
that's what I was getting to. That's exactly what I was getting at. If you go to YouTube, it doesn't matter what search you put in, how to trade stock market for beginners, stock market, low income, you're going to get a Garen Phillips video that says how I learned to day trade in a week.
And the other problem I have with this is that it sounds stupid simple, and trading, yes, is and should be stupid simple. But the way she lays it out in this video was she was talking about how, and this irks me to high hell. She's like, look, I just read that this is negative news here, and negative news means sell. Here's the thing. If I change that article around, go find an article that says, for example, Disney cuts 30,000 employees for their Disneyland parks. Oh, that's negative news. Disney should go down. It's at 180 something now. So
because they're restructured.
How is
Hertz
them
goes bankrupt?
so how is
goes up.
Yeah, like, so tell me, how does cutting employees look bad for them? Like, that's negative news, right? It's bad. I feel bad about those guys who lost their jobs. But how come that didn't reflect in the stock? There are multitude of examples, but that's just one recent one that I can think of that people should go back and look at the cause and effect for this thing.
I love how Martini always brings it back to what are their recorded returns. And this is why everybody who's here has this thing with transparency. Exile doesn't really create content outside of this, so he doesn't have to be overly transparent, but he's an honest guy if you were to talk to him about what he's held or what he does hold. But my issue is his transparency with all of these people of how many accounts have you blown up. I guarantee you that lady with that TikTok video, she will not be around in a year. It'll be gone. Most of these videos that I see on YouTube, they've blown up 4, 5, 6 accounts, even though they learned how to do it in an hour, a week, a minute.
When you get to a certain level, you can suss out frauds. And Exiled, with what he knows, it's like the same thing. When I first found Rita, I knew she was legit right away because we talked about stuff that not very many people are aware of, and everybody keeps hearing me re-mention this constantly, but data miner, that is something that's not public, available to the public, and I found that out, unfortunately, the other way.
As did we.
God, I wish it was.
God, I wish it was.
We tried so hard.
I know we did. Well, that's the thing, is people don't understand that these institutionals are basically like fishing with dynamite. They have these amazing tools. Like, if you guys had those tools, you guys would shit money. Like, and that's what's the shame in all this is people, it's exactly back to what Millennial says. If you don't know who the sheep are, you are the sheep. And like you've got to, and this is a good segue into my next question is, what habits do we want to take into the next year? And mine is definitely, you need to set your expectations about what is a realistic return that's doable over a long amount of time, aka you're probably going to burn out as a day trader, 1 to 4,000, what is that? 4,000%, 400% returns consistently over a day, every day for 365 days a year. And then for 10 years after that, horse shit.
Bullshit.
I know that because the most incredible return of all time is fucking Warren Buffett over, I think, 60 years of 20% a year. That's your bar. That's your bar. And you're telling me you're the guy who's going to beat that? Okay.
Yes.
Okay.
I mean, maybe.
Yes.
2020 was pretty good.
Yes. I am telling you that.
But it's not some random cunt on Sorry.
That's also one other thing I wanted to throw out is
On fucking
especially
social media.
I've seen people do this before. I don't know how common it is now, but it was very common back in the day where they would show you a track record, and that they would show you a scaling plan. Here's the thing: when you're looking at someone's track record, also, right, you also want to look at it for the longest time possible. If they're just showing you, recent returns in a month or something like that, right? A lot can change in a month, and a lot can change in a day as well. But if they show you, if they start and going off and saying like, oh, here's a compound chart of how much, if you invest $10,000 with me, you're expected to have $1 million in the end of 3 years at this compounded rate and all that sort of shit. Run, fucking run. Take your money, whatever you can scoop up. Don't put any money towards that person. Scoop your money and run, because that is unrealistic and it's fucking surreal, especially since you guys are going to
See
start
Ray Dalio for more information.
you guys are going to run into this, but you remember, actually, most people won't know this, but you guys would, how I fragment into my trades. I say, okay, I'm taking, X amount at this price, and if it drops down another 50 cents, I'm going to scale in this amount or whatever to get my full run in, right? I leg into my trades, and the specific reasons why I do that is because, and you will find this out when you start swinging larger figures, you will affect the stock personally, especially if it's a very low volume kind of stock. You will affect the price personally.
Yeah.
I don't know what you're talking about.
So don't get caught up in that shit.
I think that's...
I couldn't agree. Martini, you're right. I couldn't agree with you.
My big thing right now, I guess the three things I would impart now, I've thought about it some more. Obviously, risk management is one of them, but it's 2020 is such a... It's
unique.
not normal. It really is not normal. And anyone
not
who
how it
started
is.
trading in 2020 that isn't millennial, basically, anyone who just is actually genuinely new to this and hasn't sat and done that kind of in-depth learning, this is not normal. Like a 20% return year on year is great.
Yeah.
It's fantastic.
Yep.
I mean, yeah, you might have just come out and done hundreds, thousands of % return in 2020. That is atypical. And it really is. And I really would, with every fiber of my being, encourage you to just sort of
Not
temper
quit your
those
day job?
expectations going forward. And yeah, absolutely. There's going to be a lot of people when shit does go south, which it will. It might not happen this year, but there will be another
Probably
downturn.
will, but yeah.
So yeah, it's inflation might come and smack you in the nuts. You don't know what's going to happen, but you are not the god you think you are. So being humble is a huge benefit. So just that's the other thing that I would go for is that, and also just have a strategy before you start trading. Don't just go on Wall Street bets and YOLO. It's a fun fling, but
YOLO? What's
think
that?
about a relationship.
Yeah,
Exactly.
I
it's
definitely
gambling.
want to add to that, and that would also be the tip that I would give you guys for the year.
Just the
There's this common misconception that both TikTok and YouTube, Twitch, and social media, and Davey Day Trader, and all this bullshit presents that stock market is easy. Stocks only go up. You only make money, put it in, and it grows. I will tell you, from January until even now, I put in upwards of 10 to 12 hours a day researching, learning, and growing. That's the only way that I saw the gains that I did. Now, did I see atypical gains? Yes, it was an atypical year. Have I lowered my target for this year as a result because I know what the market is and have some grasp of the reality that's coming this way? Yes, I have. But the reality is I never stop learning. Most of the people that I know that are successful in the market, they are traders because they live, eat, breathe, and shit the stock market. They are in it day in and day out. I'm up at 4:30 in the morning. I see people wake up at 5, 6. They're in there. They're breaking down articles. They're looking at charts. They're doing fundamental analysis. They're breaking it all into pieces and getting ready for a market to open 5 hours later. Most people are waking up for their day job and bitching about a commute to start at 9. A trader is up at 4, 5, 6 in the morning getting ready to fucking go. Anybody that's telling you stock market easy, stonks go up, run. Understand that if you want to be a trader, it's hard work, it is constant learning, and the only reason you should be in this shit is because you are addicted to it. You can't get enough of it. And I'm talking about the learning, not the money. It's not, I'm not talking about dollars.
Like, what
The good
I'm
talking about, I am talking about you are addicted to learning how the world works every day, day in, day out. That's how you're going to be a trader. If that's not you, please seek a financial professional, continue working in your job, love your family, go to sleep at night without being an absolute maniac, considering the implications of the current ECB movement into crypto coin. Because that's how most of us go to sleep at night. So please understand, the stock market is not easy. You're in a constant state of education. Nothing is the same minute by minute, day by day. And you will always have to learn hours a day.
The thing with it is that like day trading is, or actually trading in general, is one of the hardest ways to make a average living. And people only ever see the wins. They don't see the losses that kind of like knock us back down. Thankfully, you make enough with the wins to kind of overshadow that, right? But I wanted to touch upon that too, because you never stop learning and learning and reading stuff. And like, granted, I grew up as someone who hated reading. I was forced into it. I think my parents tried to make me read a book of idioms and like do quiz and stuff like that. I never did it. I always avoided it to the point where I hated reading so much. But now as an adult, I realized that it wasn't that just because of the child rebellion where it's just like, I don't want to do what my parents tell me to do. It's that they kept forcing me to read stuff I didn't like or wasn't interested in. And everybody wanted me to read, like, or even school wanted me to read about Shakespeare. I didn't want to read about Shakespeare. I don't care about Shakespeare. I know the story. I've seen the movies. I've seen everything. I've seen the plays, done it a million times. Don't care about that stuff. One thing my friend said in one of my classes, in my lit class actually, was that why is it that we're studying Shakespeare year after year after year for 2 years? Like, give the man a rest. We already know what happens. We already know the story. We already know the metaphors and all that sort of stuff. How about we study why someone didn't succeed? Why did Shakespeare overshadow this guy? It's like, well, because they didn't succeed. I was like, okay, fine, but we know why Shakespeare succeeded. We don't know why this guy didn't succeed. And we're just being told, that sort of stuff. But the reason why I say it also is that I actually really like reading about stuff that seems kind of odd, but if you have the ability to not get personally involved and get interlaced in personally involved in what you're reading or whatever, right? You're able to separate yourself and actually read and comprehend and understand. Like, Millennial is excellent at reading a lot of the medical stuff that they put out on their earnings and interpreting it and finding out whether that's true or not. I like reading about odd stuff. Like, I was thinking about
the shortage of coffee and commodities through 2020.
I know, right? Like,
I'm gonna go back to that really quickly, but so I started reading about water. Like, I asked Rita this last year about, like, how do I invest in water?
Oh, no.
I'm thinking of filtration, I'm thinking of purification, stuff like that, and she told me to look at agriculture because that's usually a better play, which is true.
That's not my brilliance. That's Bury.
But I didn't know about this, but I only started reading about it recently. But I was like, well, so some places are super arid and dry, and they have an ocean right there. Why don't they just do water desalination or any sort of water purification? Because they can't drink the ocean water; it's too salty and stuff like that, right?
Expensive as hell.
Yeah. So not only is it expensive, but it actually creates more problems than it solves. Yes, you do get clean water, but here's the thing. The waste product left over by water desalination, the brine there, it increases the salt level in the ocean because even if you dump it on dry land, it's still groundwater that will float back out there. It will basically raise the salt level. It'll increase the algae in the water. It'll increase mollusk activity, and it'll also push away the natural habitating fish there to the point where you basically destroy the ecosystem, like the aquatic ecosystem that's already there. So it creates more problems. And I'm like, shit. So
it's monstrous on energy consumption as well.
So then I was like, okay, well, what's the next best thing? And I was just like, okay, well, agriculture. I've always wanted to look back at agriculture, and I didn't know how to get back into it because I figured the growers and like the producers and stuff like that. That's why I also wanted to learn about, which we still have to do one of these days, read about the supply chain. How does the supply chain work and stuff? And I started looking at fertilizer, because fertilizer, you need a lot of plants that get produced. They require a lot of fertilizer. It's like candy for the plants, right? And for you to actually have a crop, a very bountiful crop, a very high quality crop, you need fertilizer of some shape or form. And Rita gave us the brilliance of Scott's Miracle Grow. So it's stuff like that. Like, I have rampant curiosity in science and cause and effect, and that's one thing I would like people to kind of take forward, is just like, just if you are to invest, and this is not advice, or this is just like my opinion, if you are to invest, the notion of investing in stuff that you are familiar with and stuff that you are very interested in actually does hold true. Just don't let your personal biases bleed into that. And obviously, I guess if the last thing I would give you is that people have requoted me on this thing. I hate it, but I keep having to say it because I have to keep saying it because this is something I found out. But just because you're a day trader doesn't mean you have to trade every single day. And sure enough, you guys don't see me trade every single day. I don't.
Exactly. And with that, guys, I'm going to end the podcast. Remember, you heard it here first. Don't quit your day job unless you want to learn about mollusks and the environment like Redemption does every day. Unless you have a true passion and want to get up at 4 a.m.
Soy is good for you.
For us. That's it for us. Enjoy the podcast. Like and subscribe and leave a comment. We want to hear what you want to hear more of and what you want to hear less of. We'll see you guys in the next one. Peace out.
Slap that ass.
Bye.